what you can learn from Berkshire Hathaway's recent investments. I'm Paul Lynn in New York. Stocks, junk bonds, derivatives, all part of the purchases Warren Buffett's company made last year, and it's the topic of this week's article from Barron's associate editor, Andrew Barron. He joins us now on the set. Andrew, welcome.
Good, glad to be here.
Warren Buffett said recently on TV that stocks are not cheap. What stocks were cheap enough for him to actually buy last year, and how much did he spend?
Well, I mean, Buffett was saying stocks aren't cheap, but he's acting as if they're very cheap. And so Buffett bought on behalf of Berkshire Hathaway about $19 billion worth of stocks last year. Record annual purchases, double what he did in 2006, and net of sales was about $11 billion. So he was very active last year. Biggest purchases last year were Burlington Northern, the railroad company, Kraft Foods, Johnson & Johnson, and Wells Fargo.
Now, does he typically, is there some kind of metric that he uses to find the value in these stocks once stocks move lower to the price that he wants to buy them at?
He doesn't disclose the criteria he uses, so that's part of the mystery of Berkshire Hathaway and the mystery of the great one, Warren Buffett. So often you find out afterward when he's done something, but he generally likes good businesses with good earnings growth and good balance sheets, and he basically likes blue chip companies. I mean, that's the best way to describe it.
What about the high yield bonds? What did he do in that area? What kind of bet with the junk bonds?
Buffett is a high yield bond maven. He's been investing in high yield or junk bonds for about 10 years, and what he did in derivatives, he basically took in $3.2 billion worth of premiums in a bet that a group of high-yield bonds will not default. So Berkshire will pocket the money if the bonds don't default. So it's essentially a bet that the high-yield market will strengthen over time.
And he also made a derivatives bet on the equity markets as well. Talk about that long-term bet.
That was a little bit complicated. He sold puts on the S&P 500 and three foreign indices in a bet that the indices will be in about 15 to 20 years no lower than they are right now. So it's actually a pretty good bet. He took about $4.5 billion in premiums, plus he gets to invest that money. So if the equity markets are basically above or at where they are now in 15 or 20 years, Berkshire pockets that premium and gets to invest that money. So it looks like a pretty smart trade.
Okay, now I have to ask, I mean, Berkshire Hathaway Class A shares now top $131,000 per share. Has Buffett ever had a stock buyback, a share buyback? I mean, is his stock cheap enough to buy for himself?
Buffett is not big on stock buybacks. I don't believe Berkshire has ever had a stock buyback since he took control of the company in the mid-1960s. He'd rather invest the money rather than buy back Berkshire shares. I do think that eventually there will be a dividend at Berkshire Hathaway. The company has not paid a dividend also for the tenure of Buffett's leadership of the company. I think eventually in the post-Buffett era there will be a dividend. Could be a reasonable one, maybe 3% or so.
Andrew Barron of Barron's, thanks again for dropping by to talk about your Berkshire Hathaway article in the magazine.
Happy to join you.
I'm Paul Lynn in New York.